Good morning and welcome to the ADS Securities Markets Update. We'll start our video today with a look at yesterday's trading, which had no economic releases across the day in Europe and the US, while the banks in Canada were closed in observance of the Thanksgiving Day, and the US banks also were closed in observance to Columbus Day. However, the US equities showed a notable decline after it advanced slightly at the beginning of the session. The S&P 500 closed the day lower and by 1.65%, trading well below its 200-day moving average, and also closed the day well below 200-day moving average for the first time since 2012, which is seen as a clear sign for further declines ahead. The Dow Jones also ended the day lower with 1.35% and closed the day well below the same moving average. The US dollar also sold off again once since the beginning of the week on more and more dovish remarks by the Federal Reserve officials during the weekend, easing the speculation for a sooner rate hike by the Fed. As for the Asian session today, there were two economic releases from Japan and Australia which had a limited impact. Beginning with Japan, the PPI eased back to 3.5% in September, down from 3.9% in August, while the estimates were to ease back slightly to 3.6% only. This is the third monthly decline in a row and the lowest reading since April of this year. In Australia, the NAB Business Confidence Index came in slightly lower at 5 in September, and August reading has been revised down toward a 7, down from 8, and this is the second monthly decline in a row. During the session, the People's Bank of China surprised the market with a repo rate cut again for the second time in less than a month toward 3.4%, down from 3.5%, and this is one of the tools that the bank is using for a targeted stimulus to ease the financing cost for small companies. As for the European session ahead today, there is a collection of economic figures will be released across the session from Switzerland, the UK and the Eurozone, which is likely to have a notable impact across the day. Beginning with Switzerland, the producer price index is expected to rise slightly by 0.3% in September after declining by 0.2% in August, which would be the first monthly increase in 3 months. In the UK, all eyes will be headed toward the inflation figures today. The year-over-year CPI is expected to decline slightly toward 1.4% in September, down from 1.5% in August, which would be the third monthly decline in a row and the lowest reading since October of 2009. The core CPI is also expected to ease back toward 1.8% in September, down from 1.9% in August, which would be the lowest reading since July. Furthermore, the house price index may rise further toward a 12.3% in August, comparing to 11.7% in July, which would be the highest reading since 2007. Most importantly, in Germany today, all eyes will be headed toward the ZEW Economic Sentiment. The expectations are very weak today, or at least in October, comparing to the reading in September. The ZEW is expected to decline towards 0.2% only, down from 6.9%, which would be the 9th monthly decline in a row and the lowest reading since October of 2013. And the Eurozone also, the ZEW Economic Sentiment is also expected to decline for the 4th month in a row towards 7.1 in October, down from 14.2 in September, which would be the lowest reading since October of last year as well. Finally, the Eurozone industrial production is expected to decline again by 1.5% in August, comparing to a rise of 1% in July, which would be the biggest monthly decline since September of last year. And of course, these figures won't be a positive input for the euro to retest 1.28. There are no economic figures today during the US session. However, the market volatility is expected to remain on the rise across the day. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching.